Hello investors, I'm Jerry Romine, the entrepreneur abroad, coming to you from beautiful Phuket, Thailand. And today we're covering my winner chicken dinner stocks that are crushing it right now. And 3 of the 5 stocks I'm covering today, I just bought from yesterday's video. For those new to my channel, welcome. And here you will not find hype, BS, or drama, but you will find a logical, data-driven approach to investing. If you get anything out of the video, please click the like and subscribe button to help out. And I've got some links down below for you, including Webull, where you can get 2 free stocks. Plus, I've got a special link for TipRanks, which is one of my favorite research sites. And you definitely want to check out my Patreon, where you can get my live trade alerts, follow my portfolios, and receive our daily hot stock list. We have a lot going on in our private Discord, where we discuss everything from daily trades to option plays, and that's where you can download my free indicators as well. Let's kick things off with a success story from W. From hot stocks yesterday, Fugo is up 17%. Now, Fugo was a hot stock on Tuesday, and if you look at the chart, it was in a momentum squeeze, and we picked up a JR1 buy signal on Tuesday as well. Then Tuesday, on a good earnings report, Fugo had a strong day and closed up 11%. Now, if you look at my Momentum Dream indicator, you'll see Fugo was in the green buy zone, and let's be clear, there's no indicator that guarantees success, but we use this indicator to increase the probabilities of our success, and we like to combine it with our hot stocks and buy signals like the JR1 and the MACD crossing, which is the green arrow at the bottom indicator. Now, my channel is different from other channels because my emphasis is on teaching you how to be a better investor, which is why I go over the fundamental and technical analysis in my videos. And today's video isn't full of hype and BS because every stock I'm covering today, I've already invested in. I share this because sometimes I watch other channels and I really hate seeing people hype stocks without showing any real reasons to buy or sell. I also love making YouTube videos because it pushes me to make videos just like yesterday's on the $1 trillion infrastructure bill, and from that video, I've already bought 3 stocks, and now I can share those buys and you can make your own investing decisions based on what's right for you. And if you did buy any of the stocks from yesterday's video, please let me know in the comments down below because I'm always curious with how many people use my videos to help them find new stocks. All right, now's the time to grab a huge cup of coffee and hang on because this is not your normal stock channel. First up, we've got Tesla, and this is what I call my easy money put. On this one, I sold the August 20th 575 put for $153, and this is easy money because the chances are slim to none that Tesla is going to drop all the way down to 575. Right now, Tesla is trading at $707.82. The 575 price is right here, and again, this is our current price. So let's go over the formula that I use and how I do this. So I call this my Tesla put cash formula, and I want to sell it 7 to 14 days out. And when I say 7 to 14 days, that's 1 to 2 weeks, or if we're talking about bars or trading days, that would be 5 to 10 trading days out. And the simple formula is I want to use the current stock price, which right now we're going to call it at 708. We're going to multiply that times 80%, which would be 0.8, and that's going to be roughly equal to the put that I want to sell. So here's the math right here, 708 times 0.8, and that means the put that we're going to look to sell is going to be right around $566. Now, the thing to remember here is this is definitely not big money, but it is steady money. And on this one, when I sold it, it was $1.53. And if we do that weekly, that works out to over $600 a month. I live in Thailand. My total place costs me less than $450 a month. So that's free rent right there. And I'm going to show you how low risk this is right now. So to do this trade, we would simply jump over and we would click on the trade button if you're in Think or Swim. And then we've got to pick which option month we want to work with. You can see right now this little red POS, that means I've got a position in this trade, and this is the trade that I ended up selling before, and when I sold it at that time, it was further out, there was more risk involved, so I sold it at $1.53, which works out to $153 profit. Right now you could sell this same one for 94 cents, which would work out to be a $94 profit, and you could do that right now today based on the current prices. Now let's say you wanted to do it on the next strike price, so we would just come over here and we would look at the August 27th, and these are the weeklies, and you might have to enable these on your chart so you can see all of them. And Tesla is one of the few stocks that you can do this with because they have so much option volume. And if we come back over, we would want to be looking for what, the 566 roughly. So we're going to come over here, we're going to scroll down. See, we'll go with a 570. We would pick up $1.36 on the sell per contract. Now, one thing you've got to remember on these is you've got to be prepared to take the stock. If something happens and this stock magically drops drops all the way down to that price, you will be put the stock, so you have to have the cash available to do that. And I would be more than happy to get Tesla right now at a $575 or a $570 price. So I'm okay with that. And then I just simply do these every week or two, and it's easy money. Our second stock is DraftKings, and as of yesterday, I'm up 88.3% on this position, and that works out to $177.80 per contract out of a possible $202. So on DraftKings, I sold the 48 August 20th put for $202, and if DraftKings stays over $48, I make the full $202. Break even on this is $45.98, and if you follow me, you know I love to put my break evens on the chart so I can always see where that would be. And for this stock right now, $45.98 is here. The stock price currently is right here, and yesterday it was trading at $52.18. And if I'm put the stock, I'd have to be happy with that $48 put price, which I am. I'm very bullish on DraftKings for the future. Covered that in a recent video, and I love to sell puts whenever stocks shoot up too much too fast because the premiums are higher, and it's a way for me to often pick up free money. Now, the other thing I want to show you that's really cool on my Momentum Dream Indicator is you notice that our momentum is up. And another thing that's really cool on the Momentum Dream Indicator is our momentum is up, which we love to see, but you'll notice we've got a sell covered call. What does that mean? Well, whenever the momentum has been up for a certain amount of days, I know that oftentimes the stocks are going to pull back, and that is a great opportunity to consider selling a covered call if you own 100 or more shares of that stock. So let's take a look at the last example. Here we've got multiple blue bars, and we would have had that same alert to sell a covered call. Then look what the stock did afterwards. It ended up going down, so our call wouldn't have been exercised. We would have held on to the stock and then held it, through this time frame right here. Again, we've got the same setup with multiple blue bars. It's a potential to sell a covered call, and I wouldn't be at all surprised to see this pull back. Now, if it doesn't pull back, the call sells, I make profit, and we would be able to wash, rinse, repeat, and do it again. Now, our next three stocks are from the infrastructure video I did yesterday, and if you don't know, the Senate just passed a $1 trillion bill for infrastructure stocks. Now it has to go to the House before it gets approved, but infrastructure stocks are very hot. So Pave is an ETF, and Pave holds 100 stocks from small cap to large cap companies that derive at least 50% of revenue from infrastructure construction, materials, and equipment supply and related services in the U.S. This is what I consider to be a lower risk, safe play on that infrastructure bill. So yesterday, I ended up taking a position on it. I'm already up 1.1%, and this stock is going up. And this bill is so big that I wouldn't be surprised at all to see these stocks run for a while. If we take a look at our momentum indicator, we are in the green buy zone, and on our MACD, it is positive, and we're also in the green here, and we've got the bright green bars. So everything is looking good on this trade, and I view this as a mid to longer term trade. So be prepared for it to go up and down, but over the long term, I think we're going to do quite well on this. Our fourth stock is Nucor, ticker NUE, and the first thing I want to do is stress that this is a very high risk trade. And if we look at the chart, this is normally what I call going up too much too fast, but I made an exception for this stock, so let's go over why. First off, Nucor is the largest domestic steel maker in North America, and the Biden administration's preference for buying American should give Nucor an advantage over its larger foreign competitors in the infrastructure bill. Second, Nucor just completed the acquisition of Cornerstone Building Brands insulated metal panels business for a cash purchase price of approximately $1 billion, and they also are in the process of buying another business, so they're expanding out beyond just steel. So yesterday I did a Nucor vertical call spread, and I bought the August 20th 120 and I sold the August 20th 125. The max profit on this is $282 per contract, my max loss is $218, and my break-even price is $122.18, and you can see we've got the NUE vertical spread break-even price listed right here, and our current price is right around that at $122.72. I am expecting this stock to go up, but again, I want to express it is a higher risk position, so only do this if you've got some option experience. Looking at our momentum indicator, we can see our momentum is up. We also have the sell covered call, giving that as a possibility, and stacked means all of our moving averages are stacked. Looking at our MACD, we are definitely in an upward trend here as well. And the last stock we're covering today is Herc Holdings, ticker HRI. And this is a construction rental company. Other plays you can consider are URI, WSC. All of these should benefit from that infrastructure bill. So that bill was so big yesterday that I jumped on this stock and I'm already up 3.4%. And this is on a stock that has a recommended trail stop of 9%, which tells me it's not very volatile. And you can see it had a huge up day yesterday. So normally I don't jump on stocks that are trending like this, but when you've got a $1 trillion infrastructure bill that could pay big dividends over the next 6 months to a year, I'm thinking now is a great time to get into some of these companies, and this is one that I jumped on because of the technicals and the fundamentals. You'll see we also picked up a JR4 signal on it a little over a week ago, and we just had a JR3 buy signal yesterday as well. Looking at our Momentum Dream indicator, we are in the green buy zone, and our MACD is looking good as well. Up next, we've got our question of the day. I'm new to options and scared to start. What should I do? First, being scared of options is a really good thing because options use leverage, and leverage is a great way to lose money fast. My advice for entertainment purposes would be to study options and start very slowly. Then as you gain experience and confidence, you can take on more risk. For example, in today's video, I covered a new core vertical call spread that is definitely a high-risk trade that I only recommend for people with options experience. That said, I love vertical call spreads because your potential losses and gains are defined, so you always know the most you can lose or make. I'm thinking about showing some very low-risk vertical call spreads in the future where the risk is going to be under $100 per trade, and if that's something you want me to cover, then let me know in the comments down below, and if there's enough interest, then I'll make a video. And when I say make a video on low-risk vertical call spreads, I'm talking about where I'll buy and sell the vertical so you can see real examples from start to finish, and this lets you learn the process. I just don't know if enough people are interested, so let me know down below. Thanks again for watching today, and if you got anything out of the video, please smash that like, subscribe, and notification bell to help the YouTube algorithm show my video to more people and keep this channel growing. Have an awesome day, and I'll see you on the next video.